Good morning and good afternoon for my European friends. My name is Giulio Valz-Gen Rivera. I am the CEO at Contacto Insurance Broker. It is the second largest insurance broker in the Peruvian market. As of today, I would be presenting a topic that is really important for the mining sector and for all sectors in general. It is about what we call in Spanish the Póliza de Responsabilidad Civil, that is known as the D&O policy. That means the Directors and Officers Liability Insurance. The title for this presentation is The New World, New Challenges for the Directors and Officers Liability Insurance. So this policy for liability has a really important nature. And as of now, it is seen as a corporate governance tool that it's available for companies and that provides solvency and protects the directors and managers in order for them to avoid having their assets exposed to drastic consequences due to decision making for the company, by the company. And it not only protects the assets, but the legal expenditures that may be necessary in order for the company to defend the lawsuit or claim, and in order to avoid having a D&O policy. In general, and in the last couple of years, the societies and legal entities have tried to define the liabilities for bad corporate practices that will affect companies. Now we will go back to 2008, 2009, the Enron case, and the Enron scandal. This marked a tough start for compliance globally, in which the Sarbanes-Oxley Act was created in the US, and many other European acts. So as of now, when we make decisions in business, we're talking about a great responsibility or a great liability for people in control. These are undoubtedly the directors and the officers. I would say that in general, this is not a subject that is only applied for the US, for Canada, for the European community, or Latin American region. But all the legislations in the world have become more and more severe in order to create sanctions for bad corporate practices. That's why it's really important for us to have some sort of backing in order for us to defend the insured. In this case, it would be the manager or the director. Whether it is valid or not, we will incur in very important legal costs, and especially for crisis management costs. So in that matter, we are talking about important costs because we need to hire expert companies that will manage media and that will manage the crisis appropriately. So in Peru, this already has a legal framework. We're talking about the 177 Act of Companies Act that has to do with the 26, 8, and 87 Act that says that directors shall respond unlimitedly and solidarily before the company, to shareholders and third parties regarding damages related to acts against the law, regulations, or performed by abusing their faculties or serious negligence. Then we have the 190 Act of that same act that establishes that the manager shall respond before the shareholders and third parties regarding damages that may occur or by not fulfilling their obligations. So I think that it is clear that we have a legal framework in which we base ourselves, and this is what we need to work on. So this is not only a framework that we have, but it is also important that regardless of the manager, of a manager having malicious conduct, that means that the person didn't have bad intentions or bad faith, neither the idea of damaging the company, These daily decisions made could be questioned. These could be questioned by the shareholders, by minor shareholders, and these could end up in a lawsuit against the directors and officers. So we would need to call upon a legal consultation to see whether the lawsuit proceeds or not. So that's why the life insurance does not provide this protection to directors and officers regarding their liabilities that could be filed or reported during the effective period of insurance. It is important to mention that the D&O policies have claims made perspective. That means that incidents must be reported during the effective period of the policy. And here we have another important concept, which is the retroactive date. It means the coverage starting date. So we could have a D&O policy for renewal on 2021, yet the retroactive date could be 2015 or 2014, where the policy started. So we could have a lawsuit for this year for something that happened years ago. And if this happened during the retroactive period, then the coverage will be active for this case. We need to review some important concepts, maybe, before we present the most important things for my presentation. For example, what is an incorrect act? These are really basic and foundational concepts, but I have included them in order for us to have a complete framework of what's going on. So the incorrect act, it's basically a violation of a liability, an omission, and erroneous declaration, violation of the liabilities, an allegedly decision made or not made, incurred by one person or by different people in the policy. What do I mean by this? But this could be the manager of the company, or maybe if the policy has a coverage for previous directors as well, or if we're talking about the current manager. What is a claim? The claim is basically every lawsuit or process that starts with an incorrect act that has been started by a third party or more than one third party. Now we'll further on see what the class actions are against the insured by an arbitral, governmental, or other frameworks. We could have different claims regarding the jurisdiction. So that claim includes all of those aspects. And in that case, the policy acts to respond to all of these claims or processes. And what is a loss? We'll try to understand that concept as the compensation or the amounts that the insured will have to pay or compensate in order for them to have a verdict of the lawsuit or claim. We need to create a final settlement, and it includes all the different legal costs in order for the insured to have a protection, and that has to do with crisis management costs as well, as I mentioned. So then it could be a negligence of a manager that creates a claim or a lawsuit or a process because of an incorrect act. And then this can be started by a third party. And then we have some expenditures or some costs, what we call the compensation or loss. This is the money that we have to pay for our lawyers or the judges, because the judges usually establish a compensatory amount. All right. So now the D&O insurance is going through one of the toughest times ever. I would say that in my many years of experience regarding policy management, I have never seen what is currently happening. When I used to work at Pacifico Seguros Suiza, and I was one of the main managers of the policies of the market, for all the people that work in this sector, I think that we need to acknowledge that these last 3 years have been really unusual. Starting with the market tightening, and as a result, we have had a drastic change in deductibles and in the reform of terms and conditions. And we have had changes in claim allegations as well. As of that, we have had an increase in the number and quantity of claims. To be honest, I think there is a need for us to understand what's going on in one of these forums, because there's a need to understand where we are going in a near future and what this coverage could do for us. And all of these surprise factors like the COVID-19 pandemic are not helpful, because we will see that the market will be toughened up even more, because all of the decisions that the directors and officers are making. It really depends on the shareholders as well, because they may think that the right measures have not been taken. In general, we have a lot of those cases. So this has impacted the price market. That's why I found this image that I find really interesting, which is a rocket that's going to the moon. And we could say that those are the last price adjustments starting in 2019, and they are still going to happen. In 2019, we saw the companies that had the ADRs that were in the New York or the Toronto Stock Exchange and many other stock exchanges in the world. They have paid several times what was paid in 2018. We have had dramatic increases they have been between the 100 and 800%. And in 2020, this perspective has remained. So we are hoping to achieve a final settlement or a final adjustment, but that is really complex. When we have some companies that are not exposed to the market, for example, let's say the private companies, that regardless of not having a single claim or regardless of not being affected or having minor thresholds, and when I say this, I talk about $5 up to $10 million and not $100 or $150 million. And they have had a 30, 40, or 50% increase in the premiums. But when we're also talking about restrictive terms and conditions and, of course, higher deductibles. The deductibles are constantly changing, and we are trying to have an imminent risk policy. So we're talking about a catastrophic policy. So, for example, the coverage would only work for claims of $5, $10, or $15 million. The stock exchange claims in the US are really complex. And then we also think that in Europe, due to the new compliance reforms, the deductibles higher than $5 million will have a high market cap, and this will be even more usual. So the market is really tough right now, as we have seen in this slide. And that's why we, as an insurance broker, We try to bet on what we best know how to do. So there's a need to understand that the top management need to understand what we do, because sometimes this is not a very clear subject. And that's why we have these presentations, in order for us to explain the coverage of this policy. And we are here to help you and support you in the next steps to follow. We have had a clear dramatic reduction of the global capacity. As we know, as any offer and demand concept, the market has offers and demands. So the capacity has to do with the sum of the global insurance brokers will assign to each risk. And then we will add all the different brokers like Munich, Swiss, SCOR, ABSA, CHAP, Alliance, like Munich Re, etc. So then we sum all the capacities, and then we have a global capacity. We have seen in the DNO, we have witnessed that we have had a drastic reduction of global capacity. So under the concepts that you already know of offer and demand, if we have a minor capacity, we have a minor offer. And if we have more demand, we have a more purchase intention that creates elasticity. And then we have seen adjustments that I have already mentioned. In many cases, we have had I don't know, 100 and 200 or 300%. So we have many players that are basically avoiding these risks, that are retiring from the market. And regarding the terms and conditions, we have seen that as well in the premiums and in the deductibles. And many syndicates have expressed their disagreement in a written format. So this really is affecting the market, especially for other insurance brokers that have a lot of followers and that have really respected policies. So if these insurance brokers are retiring from the market, then all of their other followers will retire as well. This is something that is clearly affecting the global results regarding the D&O business. Then, regarding the mining sector, we can clearly see a before and after of what happened in the Brumadinho tailings in Minas Gerais. I believe, and I am sure, that what happened in the mining disaster of 2019 in Brumadinho tailings has created a precedent regarding social liability, and especially in the D&O policies. We have seen an increase in the premiums, and also by the restrictions of the insurance brokers regarding tailing dams. We have seen waste landforms. We have also seen leach pads. So this has basically generated this retirement from the market, as well taking into account what happened in the market after Brumadinho. So we have had a constant increase. So we hope these costs to become more regulated by mining companies, because even though this mining sector is already pretty restrictive in the business regarding production, in cash costs, in the metal cost, in commodities, in labor factors, by COVID, by transportation, by regulatory issues, by competencies, etc. They were also available for creating better premiums. But we see that these amounts sometimes are impossible to pay, and the premiums are not only unpayable, but we are talking about environmental damages and all that have to do with what happened in the past. It's clear that the US and the Latin American region is one of the most important areas for tailing dams in the world. And this has caught the attention of the global insurance brokers. And when we receive the forms from mining companies, we have a social liability form as well. So they are insuring their tailing dams, whether they are active or inactive, the amounts are enormous. So it is clear that information is power, and people are trying to get the more information they can, and they are trying to find those tailing dams that do not have high exposure for damages. For the Brumadinho case, it is expected for them to receive $8 billion in compensation. We're talking about 33 billion reais up to 2030. And that would include a compensation for damages, all the efforts regarding the cleaning and the restoration of the region. And this has really generated that the insurance brokers become even more careful with the wording of the policies. They are being really meticulous when it comes to the terms and conditions of the policies, and this is affecting the coverages. And not only for the BI, the business interruption, but also regarding the legal aspects of the company and the shareholders. It is clear that we're having plenty of insurance brokers that have publicly mentioned that they will retire. But then we're having a really important increase of class actions through time. And we have seen the companies that are filing a lawsuit. And for US and Canada, we are having a major uncertainty in the market. We need to really pay attention on this new European reform to see if we will see further changes. And then we're having class actions. And then we may have class actions in Europe that will create the market to be tougher than it already is. Then we have the class actions or the group actions, and we have found a special territory to build really exorbitant and millionaire amounts because of the curative damage that in some cases are determined by popular trials. And then we have that the American system benefits the situations because they have the requirement of homogeneity. So we know that the collective interests are more important than the individual ones in this framework. So who are the lawsuits directed to? We see the staff, we see the outsourcing areas, the directors, and we see other important factors that generate lawsuits when we have really weak control implementation. In general, usually 80% that are filing lawsuits are men, and they are 36 to 45 years old. This is the trend that we have had in the last couple of years. we can clearly see all the claims that were filed during up to 2018 and 19. I haven't had the opportunity to see the 2020 stats. However, we're talking about class actions that have to do with the New York Stock Exchange. This behavior has been really important. What it's being forecast for class actions in the post-pandemic perspective. We have the shareholders class actions that the shareholders can hold against the COVID-19 cases that I was mentioning earlier regarding an increase of the capital and some others that are also a subject of claims. We have the investment claims that talk about some sort of investments within the organizations that may have not been appropriate or beneficial. We are having employment claims as well. We have some cases regarding the workforce, and we have had some cases during the pandemic of important reduction of the workforce, of the headcount as well, and that is also generating claims. Then when we talk about consumption as well, we're having claims undoubtedly because of data security. I think that nowadays taking care of our data is a must. So really companies need to be really, really careful with that. So we have claims regarding data and their services and infrastructure being attacked by basically a cyber attack. So this could end up in a lawsuit or in a claim because we didn't have the right controls for data security. Then we have the BI or business interruption, which I find that is really important. We have had several claims made by companies to the insurance brokers or to the insurance companies. So when the companies deny these accusations because of the pandemic, there were already some insurance that would cover pandemics, but nobody was using them or nobody was purchasing those. So we could have some claims against the own organization. And then we have climate mitigation claims, because we know what we are going to experience in the next 30 years. We're going to have really complex situations regarding climate. So we need to be prepared to mitigate those consequences. Then what are the sources of the claims? We may have basically merger acquisition that might be inappropriate or something that the managers may not find appropriate or that could came up as a consequence because of that, a bad management of the dividends, decisions made by the shareholders regarding stocks selling that might be inappropriate or wrong forecasts that the shareholders could say that was not correct. We could have inappropriate decisions regarding M&As, disloyal competition or disloyal practices. Then we have dishonesty or governmental investigations, minor shareholders, and now we have data security, which is something that is really important in the framework of the data protection law. We could have purchases made with the business capital, and regarding projections as well, because I think that that is a really important thing, because companies really create a forecast of the results by the end of the year, and we could have a really negative impact compared to what was projected, and the shareholders could file a lawsuit regarding that. We could have a conflict of interest in general and the claims because of the purchase and selling of stocks. Who are the people who usually file these claims? We have shareholders, we have, for example, many companies that offer bonds or that hold bonds. We have NGOs, we have employees of the same company, or every third party that might be affected by a negligence or by a violation from the liabilities of the organization. And we have had really big claims. In the last years, I would really love to show you the data from 2020, but let's see the amounts of the claims. Most of them are from SEC or CA. Some of them are reference. We have 2.5 million, 200 million. We have Person Square Capital. We have JC Penney, 97 million. Yahoo, 80 million. Intel, Advanced Micro Devices, PayPal, Equifax, and in general, as you can see on the screen, we are not talking about small amounts of money. We are talking about large amounts of money and several zeros. So I think that we are now in a moment in which we need to review really, really carefully our policies, because we have two items that we need to take into account: the ERPs, or the expansion for automated policies. And for some policies, we can have that for 90 days or for up to 12 months. And that allows the insurance that have policies that expire tomorrow can be notified in the right periods of time to expand their coverage for 12 months. And that would also be retroactive as well. So we would need to have then to maybe purchase the previous coverage. So sometimes we need to create hybrid solutions taking into account the ERP. So the ideal thing would be to have a regular renewal that would have a retroactive of the previous years up to, I don't know, 2001. But if the insurance company is telling me that I won't have a coverage for tailing dams or for other environmental damages, and then my deductibles are 5, 10, or $15 million, then we need to work together in order for us to find the right solutions and to avoid the headaches that we are currently experiencing in the market. So thank you so much for your time. It has been a great pleasure for me to present this exposition. Thank you so much for your time, and very good morning.